Hello, good morning. Welcome to the exciting time to talk about business. It is Business 360, and my name is Blyden Lukem. Breaking this morning, oil rallies as US strike Iran. We begin from there. Oil prices jumped over 2% today, with WTI and Brent crude futures are trading above $75 and $78 per barrel, respectively, after the US launched strikes on three Iranian nuclear facilities over the weekend, joining Israel's ongoing war with Iran. The market is now on high alert for potential retaliation from Tehran, including threats to US personnel in the region or a possible closure of the Strait of Hormuz. As here regarding this concern, US have asked China to stop Iran from closing Strait of Hormuz. The US Secretary of State Marco Rubio has called on China to prevent Iran from closing the Strait of Hormuz, one of the world's most important shipping routes. His comments came after Iran's state-run Press TV reported that Parliament had approved a plan to close the strait, but added that the final decision lies with the Supreme National Security Council. Any disruption to the supply of oil would have profound consequences for the economy. China, in particular, is the world's largest buyer of Iranian oil and has a close relationship with Tehran. Oil prices surged following the US attack on Iranian nuclear sites, with the price of the benchmark Brent crude reaching its highest level in 5 months. As you're looking at a picture of China, as China closes gap with US as African countries, others join yuan payment system. China has added 6 financial institutions from Africa, the Gulf, and Central Asia to its cross-border yuan payment system, a bold move to strengthen the global role of its currency amid intensifying rivalry with the US. This expansion seeks to internationalize the yuan and reduce reliance on the US dollar in global transactions. The initiative aligns with China strategically amidst a shifting geopolitical alliance and financial system dynamics. Notably, this move aligns with Moscow and Tehran's own efforts to circumvent Western financial restriction as both nations explore relative payment systems and deepen economic ties. Still in Africa, the Democratic Republic of Congo, a DRC, has extended its temporary suspension of cobalt, a suspension on cobalt exports for an additional 3 months, as announced by the country's strategic minerals regulator on Saturday. The suspension aims to address the continued oversupply and low prices of cobalt in the global market. Congo's significant influence on the global cobalt market remains central amidst these regulatory developments. The move comes in response to the continued oversupply of cobalt from the Democratic Republic of Congo, a key material used in electric vehicle batteries. The initial measure was introduced in February for a period of 4 months following a sharp decline in cobalt prices. At the time, prices had dropped to a 9-year low of just $10 per pound. The original export ban was set to expire on Sunday, June 22nd. That's yesterday. Still in Africa, the government of Malawi has signed a landmark $7 billion agreement with a Chinese conglomerate, a Hunan Songwak Technology Group, marking the largest foreign investment in the nation's mining sector. The deal is for a titanium extraction project and mineral processing facility. This agreement reflects Malawi's strategic shift towards international partnership for its natural resource sector. Malawi's government sees the deal as a pivotal step towards transforming mining into an economic growth driver. And now to ECOWAS, as Nigeria's President Bola Tinubu ends tenure as ECOWAS chairman. President Julius Maada Bio of Sierra Leone has officially taken over the rotating chairmanship of the Economic Community of West African States, ECOWAS, succeeding Nigeria's President Bola Ahmed Tinubu. Bio replaces Tinubu, whose 2-term tenure was marked by significant regional turbulence and efforts to preserve democratic governance within the bloc. The transition of leadership was officiated at the ECOWAS summit held in Abuja, Nigeria. President Bayo outlined priorities including constitutional restoration, regional security enhancement, economic integration, and institutional credibility. President Tinubu, who assumed the chairmanship in July 2023 and was renewed for a second term in 2024, formally handed over the mantle of leadership to President Bayo at the close of the summit. Still regarding Nigeria, Nigeria's Minister of Aviation and Aerospace Development, Festus Keyamo, has explained how the country secured a Heathrow slot for its domestic airline APs. Keyamo made this known in a statement on his X account. He explained that a slot allocation was a result of sustained diplomatic engagement by the Nigerian government to enforce the country's rights under the existing Bilateral Air Service Agreement, BASA. Keyamo described the developments as a significant diplomatic milestone that reflects Nigeria's commitment to ensuring fair and reciprocal treatment for its local carriers on international routes. Meanwhile, Dangote refinery partner MRS filling station has increased its premium motor spirit pump price. MRS disclosed this in a new the price template released on its X account. The petroleum marketer said its petrol price would now go between 925 naira and 955 naira per litre nationwide, from 825 naira to 895 naira. This means that motorists in the country, most importantly Lagos and the Southwest, North Central, Northwest, Northeast, and Northeast, would now buy petrol at 925 naira, 935 naira, 955 naira, 945 naira, 955 naira per litre respectively. However, the Nigerian National Petroleum Company Limited pump price, the petrol pump price, has remained at 875 naira and 895 naira per litre in Lagos and Abuja as of Saturday evening, when noted. A petroleum market has increased their petrol prices nationwide following a surge in crude oil prices as a result of the Israel-Iran war. When it concerns from this war. And now let's look at 9 major Nigerian banks as they recorded a combined interest expense of 1.9 trillion naira in the first quarter of 2025, representing a 43.2% increase from the 1.33 trillion naira posted in the same period of 2024, based on analysis of their unaudited financial statements. Over the same period, the total interest income stood at approximately 4.18 trillion naira. According to the Corporate Finance Institute, interest income is the amount paid to an entity for lending its money or letting another entity use its funds. Interest expense is the cost a company incurs for borrowing money. In the context of banks, interest expense refers to the amount they pay to customers and institutions for using their funds, such as interest paid on customer deposits. In the period under review, Access Holding posted the highest interest income of 964.6 billion naira in the first quarter of 2025, up 58.6% from 608.1 billion naira in the first quarter of 2024. However, its interest expense also increased sharply by 71.3% to 760.47 billion naira from 443.88 billion naira, putting pressure on net interest margins. And now to pensions. The Director General of the National Pension Commission, Ms. Omolara Oloworaran, has revealed that over 233,000 retirees on the program withdrawal plan would benefit from the improvement in the monthly payout, which has increased to 11.9 billion naira from 8.3 billion naira. Oloworaran disclosed this at the second quarter press briefing held in Lagos. Describing the increase in the monthly pensions as a pension boost 1.0, she noted that it was only possible on the back of strong investment returns on retirement savings accounts. Oloworaran went on to reassure retirees that periodic pension increments will be sustained, with more retirees expected to benefit in subsequent exercises. Meanwhile, Nigeria and Rwanda are among 34 African countries hits as Ecuador revokes visa-free transit. Ecuador has announced the cancellation of visa-free transit privileges for citizens of 45 nations, including 34 African countries, in a significant tightening of its immigration and border control policies. Travelers from these nations must now obtain a transit visa to transit through Ecuadorian airports. Nigeria, Rwanda, and Ghana are among the 34 African countries affected, making the continent the most impacted region. Previously, citizens of these countries could transit without a visa if they stayed within the international transit area without clearing immigration or customs. However, this exemption has been revoked. According to Ecuador's Ministry of Foreign Affairs and Human Mobility, the measure aims to enhance transit regulation and address growing security concerns related to irregular migration. And now let's look at the countries and citizens from the following African countries that will now need visa for transit. Let's look at the list. Well, it's a long list of about 34 African countries. So number one in the list, we can see Nigeria, Ghana, Egypt, Sudan, Ethiopia, Eritrea, Somalia, Democratic Republic of Congo. Even further, we see Cameroon, Liberia, and Sierra Leone. Let's look at the second one. From number 12, well, we have Sierra Leone, Guinea, Guinea-Bissau, the Gambia, Senegal, Togo, Benin, Mali, Niger, Burkina Faso, Chad, Central African Republic, Angola, and the third lists. Angola, we're talking about Mozambique, Zimbabwe, Zambia, Rwanda, Burundi, Uganda, Algeria, Morocco, Tunisia, South Sudan. A whole list of African countries there. And now we'll go on a quick break, and when we're back, Business 360 continues looking at global economic standings and the markets. Don't go anywhere. Welcome back to Business 360. And my name is Vladimir. And now to global economic standings around the world and the market. First, we begin with the top 8 African countries with the least affordable housing in 2025. The 2025 Global Housing Affordability Index from Number has revealed a concerning trend across African countries, a wide gap between property prices and average household incomes. The new ranking places Ethiopia and Cameroon among the 3 least affordable housing markets in the world, trailing only behind Syria and Cuba. The price-to-income ratio, PIR, is a key metric used in this index. It compares the cost of a home to the median annual household income in a country. The higher the ratio, the more years of income it would take for a typical citizen to afford a house, signaling poor affordability. Number, the world's largest database of user-contributed housing data, released a 2025 figure based on crowdsourced entries across global cities and countries. And now let's look at the top 8 African countries with the least affordable housing in 2025. At number 1, Ethiopia. Ethiopia at a price-to-income ratio of 47.1. Cameroon at number 2, indicating how difficult it is to save money as a worker in the country to be able to afford a home. Mauritius at number 3 at index level of 18.5, and Egypt number 4, Algeria number 5, number 6, Morocco, number 7, Tunisia, and number 8, South Africa. The data paints a stark picture of countries like Ethiopia and Cameroon, where citizens face almost 5 decades of income sacrifice just to own a modest home. In contrast, some African nations like South Africa have some of the most affordable housing ratios on the continent. In Addis Ababa, the situation is especially severe, despite hosting institutions like the African Union and the UN Economic Commission for Africa. The city administration has prepaid just 1.9% of its 25.85 billion baht bond to the Commercial Bank of Ethiopia over the first 3 quarters of the fiscal year. Experts blame the lack of mortgage banking, luxury-focused development, and a widening gap between housing demand and availability in Ethiopia. The crisis is also tied to a wider slowdown in Ethiopia's real estate sector. Developers face longer sales cycle, while government efforts to regulate the industry and close the supply gap have struggled to gain traction. And now to the markets, looking at the commodity market as gold remains volatile as a Middle East conflict escalates. A gold hovered around $3,360 per ounce in volatile trade today as investors closely monitor the escalating war in the Middle East following U.S. involvement in Israel strikes on Iran. U.S. forces struck Iran's three main nuclear sites over the weekend, with President Donald Trump warning of more attacks if Tehran does not make peace. The outbreak of the Israel-Iran war has added fresh momentum to a rally that has driven gold prices up nearly 30% so far this year. And meanwhile, several Federal Reserve officials are scheduled to speak this week, with the Fed Chair Jerome Powell set to testify before Congress over 2 days, where discussions are expected to cover the potential impact of President Donald Trump's tariff and the attack on Iran. Well, quickly, let's go to the market first and look at the price of the metal commodities, and afterwards, we'll talk about other commodities. The market. Gold price begins at 3,360 US dollars per ounce, falling by 8.58 points, a negative 0.25%. Silver price at 36 US dollars per ounce, gaining 0.191 points this morning, a 0.53% appreciation for silver. Copper price falling negative 0.64% at 4.79 US dollars per pound. A steel price, no significant change in the price of steel. And now to energy market. Still considering the crisis that's taking place in the Middle East, energy market indicates the price of crude oil at 73 US dollars per barrel, falling at 0.426 points, a negative 0.58%. Brent, which represents Nigeria's price benchmark at 76 US dollars per barrel, also falling, a negative 0.58%. Natural gas, gasoline, heating oil, coal, all falling. The energy market seeming to be affected the most this morning. Agricultural market. Agricultural market has the price of soybeans at 1,066 US dollars per bushel, downward by 1.61 points, a negative 0.15%. Wheat price at 564 US dollars per bushel, falling 2.77 points this morning, a negative 0.49%. Lumber gaining 0.34 point. Palm oil price gaining 16 points at 4,181 Malaysian ringgit per ton. The price of palm oil. While the agricultural market has mixed fortune this morning. Quickly to the financial market, let's look at the state of the Naira in the first quarter of 2025. The Naira strengthened at the official window in the past week to 1,547 Naira to the dollar for 1,549 Naira per dollar, supported by intervention from the Central Bank of Nigeria, which injected dollars into the market to ease corporate demand pressures. Analysts also alluded the development to the resilience of the Naira to foreign exchange inflows from foreign portfolio investors. Cordros Capital Limited, in an investor's note, revealed that foreign portfolio investors brought in dollars to participate in the open market operation auction by the CBN. The CBN conducted an OMO auction driven by its continuous effects and efforts to absorb excess system liquidity. The central bank offered 600 billion naira across the 155-day and 204-day tenors, attracting strong investor interest, with total subscription reaching 1.14 trillion naira. Ultimately, the CBN allotted 1.07 trillion naira, with stop rates clearing at 24.2% and 24.59% respectively. The 0.13% week-on-week appreciation in the Naira is an extension of the gains that the currency has been making since the beginning of the month. However, in the black market, the Naira weakened slightly to 1,585 Naira per dollar. And now to the market. First, the US dollar against the Naira. Afterwards, we'll check the parallel market and the euro against the US dollar. Let's look at the US dollar against the Naira. A US dollar against the naira price level stands at 1,551 naira to the dollar at the international exchange window this morning. The naira gaining a 1.56 points. The dollar gaining 1.56 points over the naira. The euro against the naira at 1,789 naira to the euro. The euro gaining 2.7845 points over the naira. The pound also gaining 2.77 points over the naira, 2,088 naira to the pound. Now let's see if we get the parallel market ready and the indices of it, and also talking about the Euro USD market this morning. The Euro USD market this morning. A Euro USD market, a price level stands at 1.148 points mark this morning, a slight decline in favor of the dollar against the euro. And pound against the US dollar at 1.3401 US dollar against the pound falling negative 0.3% against the dollar, and the Australian dollar also falling against the US dollar. Now quickly, the cryptocurrency market. Crypto market indicates the price of Bitcoin at 101,868 US dollars for one Bitcoin. A Bitcoin gaining 885 points this morning, a 0.88% appreciation. Ether again 3,500, price level of 2,262 US dollars. A Binance getting 9 points. Cardano, Solana, Ripples all on the positive. And now to the equity market, beginning with European equity markets. The European equity market was set to start the week on a weaker note today as investor sentiment soared following a sharp escalation in the Middle East tension. In Europe, attention will also turn to preliminary manufacturing and services PMI data for June, which will offer fresh insights into the region's economic outlook. In pre-market trading, futures on the Euro Stocks 50 and Stock 600 were both down around 0.5%. And now let's look at the Euro Area Stock Market Index, EU50, the Euro Area Stock Market Index. And this morning, our French stock FR40, a price level or index level, stands at 7,584 index points, falling by a negative of 4.86 points. Well, that in Germany, the E40 also falling by a negative 8 basis points. The Italian stock IT40 falling by a negative 269 points. Well, the stock market in Spain, ES35, gaining 33 basis points this morning. The Euro 100 gaining 2.09, and similarly, the Euro 600 gaining 0.15 points. As we close a Nigerian stock market, domestic investors have continued to dominate trading activity on the Nigerian Exchange Limited, with a total of 3.41 trillion naira worth of transaction recorded in the first 5 months of 2025, outpacing foreign participation. According to the latest domestic and foreign portfolio investment report released by the NGX recently, domestic transactions accounted for 2.42 trillion naira, or 70.83% of total equity trades between January and May 2025. In contrast, a foreign portfolio investment stood at 996.03 billion naira, representing just 29.17% of the total stock. And now we close with African stock market this morning. The African stock market. African stock market, Nigerian stock market index level stands at 118,138, gaining 277 basis points. South African stock gaining 361 basis points, and Egyptian stocks EJX30 gaining 271 basis points, while stock in Nairobi are gaining 11 basis points. That's what happens within the market this morning, and it's Business 360. Thank you for being a part of it. My name is Vladimir Kim, and thank you for watching.